Hey guys, my name is Alejandro Zambrano and I'm the Global Chief Market Strategist with TFEX. And we're going to do a special webinar on Bitcoin. So we're going to try to get ready for the big move in Bitcoin. And the reason for doing this now is that there's some interesting price formations in Bitcoin that we would like to address. So over the next 15 to 20 minutes, we're doing this webinar. And if you do have any questions, you can just put them in the chat box to your right. And let's just get going then. So what are we gonna talk about then? So as it says here in the title, we're gonna try to get ready for the big move in Bitcoin. I say big move because I don't really know if it's gonna be a bullish or a bearish move, but I suspect it's gonna be a bullish move. So that's what we're gonna talk about. I'm gonna talk a bit about why that is happening. We're gonna talk a bit about the halving that we've been that people have been talking about and why that is not really playing out this time around. I was gonna talk a little bit about the usage of Bitcoins and cryptos and dApps and see if that has any impact on the price action. And then we're going to take a look at the charts. So let's begin. So why? That's the question, right? Well, let's deal with that in a minute too. So if you're totally new to me, so my name is Alejandro Zambrano. That's me here sitting. At the time when you can actually go out. Right now I'm in my home, but this is from the CNBC London studio. So I've been doing this for quite some time. I've been trading with my real account since 2006, and I actually quite good at cryptos. I don't always trade them. I don't trade them every year. I do trade them when there's some strong bull markets. That's when I trade them, and I made some good money on them. So hopefully that's a good enough reason for you guys to stick around. Also, I do trade normal markets or currencies, indices, and commodities, and I'm quite good at that as well. So that's a good reason, I think, why you should stick around for the next 15 to 20 minutes so I can provide you guys my latest outlook on cryptos. So I manage a site called investingcube.com. You can check that out. It's a news and investing website. I'm also the TFEX Global Chief Market Strategist. So who are TFEX then? Well, TFEX themselves is a FCA regulated broker. They do offer trading in currencies, indices, commodities, and cryptos. And that's why I work with them. So, and what we do is that we provide education to the clients and also analysis. And before that, I used to work for a company called FXCM. That stands for Forex Capital Markets. I don't know if you remember them, but they used to be one of the world's biggest retail Forex brokers. In their heydays when I was there, and I was there from 2009 up until 2016. So I did quite a few years. But then I started to trade in 2006. So I have significant experience of trading with real money. I started with an account with 2,000 euros back then, and I was trading currencies then. And I done quite a lot of mistakes, and I learned quite a lot of things, and hopefully I can share some of this with you guys to hopefully help you guys with your investments and trading. So good. Yes, before we forget as well, with TFEX, I have produced a premium educational course. It's free for any TFEX holder, and it's about 4 hours long. I've done a similar course with similar content. I used to sell though access to that for £1,000 each. Why £1,000 each? Well, because I made significantly more money trading with the same content there. And another reason, for example, like it's a very good. You save 8 years of pain. That's where I usually say 8 years of pain. That's how long time it took me to become a consistent, profitable trader. And that's what you save. So that's why I sell for £1,000 each. But with TFEX, you can actually get that for free. You as a user, you get it for free. Instead, TFEX would pay me. So it's very straightforward. And how do you end up paying TFEX then? Well, every time you trade, as you know, you pay a spread, and that's how they make their money. Simple as that. So we have that, and you get that for free with an TFEX account. We'll talk more about that later, but it gives you 2 complete trading strategies, money management, and also an introduction to trading to help you guys get going. And we do that all within 4 hours. Okay, so TFEX then. Who are they then? TFEX is a regulated broker. When they launched, they took out adverts on these London cabs, and you could see them around town. And they are FCA regulated, which means that if you would open an account with them, your money is safe in many different ways. For example, you can't lose more than you actually have on your account. In the past, you didn't have that protection. So now if you would lose more than you have because of leverage trading, you won't be owing the broker any more money. That is something that an FCA regulated broker offers. What else? Money needs to be segregated, so they can't take your money and put that in the same pot as their own money and then do advertising and stuff like that, pay salaries. That used to be in the past, and in fact, in some places, it still is like that. Which always creates a risk, especially if the broker goes bust. Because the broker goes bust, then suddenly anybody that they owe money to are going to say, oh, look at that, that's client money. And if it's not been properly segregated, you have a situation where they're going to take your client money just to pay any bills that the broker has, or any money that the broker is owning. What else? Well, it's actually quite a big, within the actual London branch. So the London branch itself is an independent company, but then there are a bunch of other TFEXs around the world, and across the world there's like 400 TFEX people, and they use but by themselves they're unique companies, but within the group there's some 400 of them, so they're quite big. They offer support in many different languages: English, Spanish, Italian, German, Portuguese, Chinese, Vietnamese, Malay, Filipino, Arabic, Spanish, Latin America. There's a ton of them. So they're quite big from that perspective. Now, as we are going to look at cryptos as well, of course, they do offer cryptos. So they offer CFD trading on XRP. So that's Ripple, Litecoin, Ethereum, and Bitcoin. So that's it. All right, so what are we going to talk about today? Why should you spend the next 15 minutes with me then? Because we're going to talk about the Bitcoin halving. How is that influencing things? We're going to talk about the use of cryptos. We're also going to talk about the price outlook for all these different markets. So let's begin. Let's begin with the background here. So halving, what is that then? Well, that's just a big thing that people talked about, and the reason for that is that last time this happened for Bitcoin, the currency rose by a significant amount. So now everybody's getting excited for that again. Unfortunately, though, we're not seeing that sort of move as people were anticipating. Of course, the year is not over yet, so we might still see some big moves. And that's the levels we're going to talk about, try to explain that to you guys. So before we go more in deeper into what potential price move we could see on the back of that, what are the halvings? So these are pre-programmed situations in Bitcoin where the fee that the miners are getting paid is getting halved. What does that mean? Well, in the Bitcoin network, when you send money from one person or from one account to another account, someone has to validate that transaction. So what happens is that you have miners, you have nodes, you have supercomputers, and that effectively will take your order and then they will validate that. They will process that, so to speak. So when they do that, they get paid. They get paid a fixed amount of Bitcoin. And it really started in 2010. They were getting 50 coins per transaction. And then at the halving there, it got reduced to 25, and then even more and even more. So they're getting less and less. Obviously, we're here right now. So the latest one is now at 6.25 Bitcoins, not to just do one transaction, of course, but to do a whole block. So what's happening here is that this is going to diminish, and it's going to be super low here by 2045. That's when it's anticipated that this is going to end. And these guys, they get money for processing it, and then of course they get some of the fees, but the fees right now are very, very small. So what happens here is that there's going to be less coins available. So some people say, well, there's something less available for something, and the demand remains the same. What does that actually influence? How does that actually influence things? Well, if the demand is stable and the supply goes down, then demand is higher than supply, and then the price of the asset will go up. That's the typical logic. The only issue here is that it's super well defined. We know pretty much exactly. Here you have CoinDesk Research. I took their chart from their report, and they do great work, by the way. Check out their website. And you can see here that that is pretty much predicted exactly what's going to happen, and that's something that people like here. It's a bit like gold, right? People call Bitcoin gold. Why? Because with Bitcoin, most of the with gold, the added new gold, that the gold is being added every year, is very small compared with the total mass, and that means that that it stores its value. On the other hand, look at the US dollars. They printed, the US government or central bank added like, I don't know, 15% of GDP in printing money because of the coronavirus crisis. I mean, that's huge. And then you have the borrowing from the government. They just borrow a ton of money now as well, another 15%. I do think it's a good idea because to support the economy in a time of crisis. I mean, it's sad that people will lose their jobs just because of a virus that a few years from now is probably not even going to be talked about. So I think it's a good move. Of course, the problem there though is that the dollars are being debased because suddenly you have trillions of more dollars, literally trillions of more dollars. So the value of the dollar is declining. Here you don't have that. So that's why people thought this was going to rise. So to bring it back a step, when they mine a block, they usually got 50 coins each time. That would drop to 25, and then to 12 and a half, and then to 6.5. So you might say, why are people even bothering? Why are people mining anymore if it's going to be like this? Well, the reason why they would mine more is because if you look at the actual numbers here, let me just do like that. You can see here that back in 2011, your actual Bitcoin itself was very cheap. So you had a story when someone bought like a pizza for like a few Bitcoins. So I think in today's value, it would have been probably the world's most expensive pizza, just because back then a coin wasn't worth that much. So the yellow line here is how much money they used to get in Bitcoin. So you used to get a lot of Bitcoins in the beginning, but money-wise, that was nothing because Bitcoin itself wasn't worth too much. But because the price of Bitcoin has risen, here's the amount of millions they were getting. So right now, per month, the miners are getting about $500 million per month to facilitate transactions of people. So they're not necessarily worse off because the price of Bitcoin itself is gaining. If Bitcoin would decline back again, then yeah, good luck. But it's not the situation right now. So why people are super interested in Bitcoin halflings then there? Well, it's very straightforward. In 2012, Bitcoin was at $2.54 54 cents. That's correct. In 2011, 2012, and then 1 year before the halving, the whole thing went up with 385%. And then they did that halving, and then the market rose with 8,000. It went up from, imagine that, $2.84 up to 1,000. So that's the last the episode in 2012. And then you had a corrective phase, and the price hit a low of $269 per Bitcoin. And then 1 year before, it went up again, and then after that, it went up even further. Now in 2018, as you know, we've been going down and down and down, and this is the beginning of, this is actually, what is this actually? It's about 1 year before the halving, which has already happened, right? So from that period up until now, we saw a negative decline of 0.3%. So we did not see that rise as we've seen in the past. So why does it like this then? I think it's quite simple explanation. So in the bull run of 2012, the S&P 500 rose at that time with 35%, and gold, not old, but gold fell with over 20%. In 2016, the S&P again rose by 30%, while gold was flat. And we've seen these correlations. It's actually quite obvious. I didn't do it this time around, but if you would take a price of Bitcoin, and on top of that, you put the S&P 500, you can see that they're fairly well correlated. What does that tell us? Or what does that tell me? It tells me that when the times are good, when people have money to spend, they don't mind putting 500 pounds, 100 pounds. It becomes like a bet almost. So when the times are good, people are happy to put money into these markets. And by good, I define stock market good, not necessarily good for the general economy, because we know since 2008 it's been a bit sluggish. It's definitely not at the old times, but it's a bit sluggish, as you know. And now we have a pandemic, right? So for millennials, and it hasn't been really that easy, and for everybody else for that matter. But stock market wise, you know, it was a good time from 2009 up until now. We had amazing rallies up until recently. So that is missing now. So the key a little bit is the future here for cryptos and Bitcoin for this year pretty much depends on how stock markets do and how the economy recovers. Unfortunately, it is like that. So I don't really anticipate. I mean, I've been bullish on stock markets for quite some time, and we got that really good here because I do daily market updates. But I think there's a situation now where markets have risen quite sharply, and now it's up to the economy needs to prove itself, because stock markets have risen, as you know, very sharply. So what needs to happen is effectively the stock markets, the economy now must match what the stock markets have done. And if that does not happen, there's going to be a situation where you see stock markets moving down again. And then what can happen is for if stock markets go down and the economy goes deeper into trouble, then I don't think people are going to be buying Bitcoins. So then this whole big move is probably going to be a bearish move instead of a bullish move. So that's the story with this, and I think that's the simplest example to this. Another thing as well, just to bear in mind, just because something has happened 2 times, it doesn't mean that it's going to happen a 3rd time. So that's also something interesting. And then there's another theory, as I said before. If Coinbase, given the current sort of rate of usage, can figure out that, you know, when all these halvings are going to happen, then if it's so predictable, then it really shouldn't matter, because we already know exactly what's going to happen, more or less. Probably going to happen quicker if people actually use the currency and Bitcoin. And that's what we're going to talk about next. So users of blockchain apps. So this is a site, and on this site you can see all the dApps. So dApps are like applications that are put on networks like the Ethereum network, EOS, Tron, and so on. And there's about 3,470 apps right now that people are looking at and using. And then we have daily active users right now. That's at 68,000. Now this is what's interesting. So this, I know it's just a snapshot. It's difficult to find the complete set of data. But in the last 24 hours, the money used in these applications is a low $17.81 million. That is a very, very, very low amount. If you look at the actual money in coin overall traded yesterday, is some solid 9,900, so 99,000 millions, 755 million. Obviously some silly number. Anyway, here are the 17,810,000 divided by the actual money that was transacted yesterday. All right, that's what was transacted yesterday. Here's how much the whole thing is worth. All right, so that's the market cap. So you can see here that the actual money used is just not even 1%. It's not even 0.1%. It's 0.02%. So it's super low. So the actual usage for this, I mean, the whole idea with blockchain, if you ever went to one of these big events that they had, like the organization set up, I remember in the heyday, so it's literally it was snaking itself around like what was it called, like the Victoria Exhibition Centre, I think so, or Elizabeth Victoria Exhibition Centre, I think it's called. It's in Westminster in central London. So it literally, the queue was snaking itself around and the house and the building, and you had to like wait like half an hour just to get indoors. And indoors, you were speaking with all these people, and all these people were like, yeah, we're going to create this cool application based on blockchain. And it was like 50, 100 different projects. And it was quite interesting is nobody actually had started, well, Most of them had not started. Everything was just in a test phase. And this is quite interesting because they do look at all the data. And this data hasn't really changed a lot. So in fact, people are not using the applications as they said they were going to use them. It appears, and what's missing from here though, is that it's difficult to disentangle what are people, like if you have a Bitcoin account, are you getting paid in Bitcoin, or are you paying someone in Bitcoin? That is interesting. But it's difficult to disentangle that. But my general view and my general sense of the market, and by looking at these numbers alone, is that people are not using the blockchain as anticipated. So that revolution that people are talking about is not there. It's not there in the numbers because you can't see it by tracing the money. Maybe some of these transactions is genuine transactions where people are paying for somebody's services or somebody's products. But again, it's quite difficult to disentangle. But if you look at these numbers by itself, again, it's unlikely that the huge chunk of this is actually money that's being used. So what does that tell me? Well, it tells me that most likely we're just in it for the speculation. People is doing it to speculate. And that can explain things. If markets, let's unlock this chart, if people were generally using the coin like they use the dollar, then I mean Bitcoin is slid with 64%. Yes, from its yearly high, slid with 64%. Recuperate much of that. But if they were generally using it, it wouldn't be that volatile. It would be more like the US dollar. So it will move 5%, maybe 10%, but it won't be a situation where you have a 62% move just because of, so that's the key point. So, and that's a challenge. It's a challenge because you can't take macro fundamentals and try to make sense of them. Of course, you can research a coin, you can read up about it, you can study it, and you can have a bet on it, like one of these coins that have a network, for example, or maybe you're just betting on Bitcoin that you think people are genuinely going to use Bitcoin. But the way it looks right now, because people were talking about using Bitcoin already in 2017, again, people are not using Bitcoin, and they're not using dApps to the same amount as the money being transacted. So overall, it's just speculation, which is good and bad. I'm not saying it's never going to happen, but a lot of people, they just focus on the fundamentals of some coins and the visions that the people do, and then just hold forever. And yeah, sometimes you get super rewarded, but most of the time you do not get rewarded. All right, so let's talk about the big move in Bitcoin then. So overall, what can I say? The halving is probably not going to affect us. It's probably, hopefully the whole thing is going to work out with coronavirus and we can have a big move in cryptos. But the way it's looking right now, I think this will not necessarily have a breakout because of, I think stock markets have gone up quite a bit, but I don't necessarily see them trading substantially higher unless things become super good really quickly. But you never know. I'm really hoping I'm wrong. And if that's the case, then that's when it becomes interesting. So let's talk a bit about the levels. All right, so this is just Bitcoin. This is a weekly chart. And what you're looking at here is the market pretty much trading sideways between, or trading within, if you put some lines on top of this, you're in a massive triangle. So this is a technical pattern. It just tells you that the market is very volatile and people know if they should be buying and selling. And usually what happens is that these lines are going to meet at one point and then they'll have some sort of a breakout. But you don't usually have to wait until the very end. So you don't have to wait until April 2021 for a breakout. A breakout, by the looks of it, will probably happen over the next few months. Hopefully it will just go upwards because being bullish and buying cryptos is much easier than trying to sell them. And from that perspective, there are different ways of measuring things, but some people are going to take the base. So if you take the base, you get a really exaggerated target. Then it tells you you're going to get like almost a 10,000% gain, or like a $17,827 per coin, which means that we're going to go up to $28,500 per coin. I mean, that would have been amazing. But usually if you would do that, you will just be disappointed because it's so difficult to actually get the whole base of the triangle. Instead, if you're looking at something like at the midpoint, that is usually a better idea. So if we would have a breakout imminently, yeah, we can go up maybe to 22,895, and that's super interesting. Now, if we go down into the daily chart, you can see that we are to some extent also creating some sort of a mini triangle in the very short term. And this triangle could be when it's gonna provoke a breakout from the bigger triangle. And that's why I'm watching. But triangle by itself is not a very good and reliable pattern. But doesn't mean that we can't give it a try. So what am I looking at? I'm specifically looking for the break of this level, but that level by itself is not what's going to trigger the breakout. What's going to trigger the big move is a break to the high of this year at the 10,494 level. So take that level out, we could potentially go substantially higher, all right? So we can potentially have an indication that that's going to happen on a break to the May 7th high. So just to give you an idea, this is one way of doing it. Doesn't mean that you have to do it, but this is just one way of doing it. For example, I would potentially buy a bid here at 10,134. Stop loss orders, I don't know right now, but probably somewhere in the middle of this range. And then on the price ticking at this high, I would go add more risk to it. Which means I'm going to have a nice little entry somewhere here in the middle, and then hopefully we can push to the first level, which is 12,233, and then maybe the next level, which is 13,202, and then we'll see if we go towards the full target. So the level I will watch is 10,095, that's the short-term level, and then the big level is 10,522. The big level is what needs to go. There's also another interpretation here, and again, we need to take out this level to even make this interesting. And then for the big level is this one. There's the alternative reading, which I'm leaning towards, and I think that would be probably the what's going to happen. But look at this like this way. This could be an inverse head and shoulders. An inverse head and shoulders is when you create a head, a left shoulder, and then we have the right shoulder. We're missing the right shoulder now. So that if that's the case, then we need to go down to 7,000. And then we have a break. Then we're not going to really deal with this triangle the same way. We're going to deal with another line that goes here, but we're not there yet. So to summarize, keep an eye on 10,522. If we fail to take that out, we could be in a situation where we're going to create the right shoulder of a head and shoulders pattern, and then we can go upwards higher. But this is the big level. If that level goes, then a lot of the smaller coins like Ethereum, Ripple, Bitcoin Cash, Litecoin, they're gonna go mental. That's usually what happens because there's also smaller coins, which means that percentage-wise, you get a higher return. Like if Bitcoin goes up to its target, it's gonna be 116% change. If Ethereum, for example, which is here right now, if that one will go up, I mean, you can just look at it from here. If you look at it like this, this is a non-log chart. How far are we from the all-time high? Well, 545%. How long are we from the all-time high in Bitcoin? Well, we are 110%. So Ethereum, to some extent, has, if we're just going to go back to the prior high, has 5 times more to give you, potentially. So what I do, I don't necessarily actually trade Bitcoin outright because of the low percentage return, but it is the one that is gaining. So, but what I do though is that when I see Bitcoin, people getting busy and excited about Bitcoin, I will usually trade some of the smaller coin. And here is a smaller coin, and it is Ethereum. Ethereum is trading at $219 per coin. So you can buy more of these coins than what you can do with the Bitcoin. Does that make sense? Now here the situation is different and it's not as bullish. This is a descending triangle, which itself is a bearish pattern. So if we do take out 80.36, it does suggest we can trade all the way down to $21.52 per coin. So that's a significant decline of 73%. What I'm doing here, by the way, is I'm taking the difference from here to here. That's how you get that target. But instead of taking the dollar amount, I took the percentage amount. Because if you take the dollar amount, well, 80 minus 222, well, that's a negative number. And this is not going to go negative. It can just go to smaller and smaller fractions. So what I do is difference from here to here is 73%. So slide from here to here is 73%. So what can you keep an eye on then? Well, in the very short term, you have actually quite an interesting pattern here, which is that you have a head, left, and right shoulder. Now this is just a pattern this from April 30th, so it's not a really old and mature pattern, but it does suggest that if we take out that high, then we could go up with about some 15%. And then what you want to see, again, you want to see Bitcoin rallying. If Bitcoin takes out as high, then people might get excited about this one and they push it up maybe to 2,600. And if we're really lucky, Bitcoin just gets more crazy. Bitcoin starts to rally big. And then this coin will take out its descending triangle, and it does that by taking out this line here. And then maybe we'll go all the way up to 492. And that still will be far away from its all-time high. So Ethereum is definitely something to keep an eye on. Now this is Ripple. Ripple is actually not very bullish. It's not like a nice pattern here. Ripple on itself is actually bearish. It's in a clear downtrend here. You can see clearly how it's going down. So I wouldn't really focus too much on Ethereum, but you could have a nice move in Ethereum on a break here to the upside. But again, here's more of a bearish, if anything, because you have a head and shoulders, but the bearish pattern, you get head, left, and right shoulder. And what it says is that if we trade below $17, 17 cents, 17.24 cents per coin, then we're going to slide with some all the way down to the low from this year. For this to turn bullish, as a minimum, we need to take out 23, and then that might potentially be something. And again, sometimes I will take positions on, again, in coins where the pattern is not very good if something interesting is happening in Bitcoin, but I doubt I'm going to take a position on the way this looks like right now. All right, here's Bitcoin Cash. Bitcoin Cash is forming, with a bit of imagination, it's actually forming a ascending triangle. Ascending triangles are good patterns to trade. And this one is actually very beautiful. Break to $281 per coin can boost you up with $75.9 per coin. That will be a 26% move. But within the bigger perspective, I know it's not 100% like this. It's actually more like this. Within the big picture, you also have an ascending triangle, right? Because you have that flat resistance and then you have upward sloping trends. So you have, actually, I'm going to get rid of this one. So what you have here is you get a big ascending triangle to some extent, and then you have a smaller one. And even if you don't have that, take this level out, which is the next resistance level. Well, the next resistance level is this level up here at 500. So if we take out this level, there might be no stopping until we go up here. So that will be a 74% move, or $210 per coin. So this is definitely something to keep an eye on if we would have that move. The pattern, the small pattern itself, just suggests we're going to go up, which that's as much as it gives us. But the key point is here. This breaks around the same time. Bitcoin takes out its high. Then that's the thing, because if Bitcoin takes out its high, this is going to go up. And then you're going to see a bigger move in all the other coins. So that's why Bitcoin Cash, I'm keeping an eye on 281. All right. And then if this would break out higher into is a descending triangle, then you suddenly have a target here of 894. Finally, this is Litecoin. Litecoin by itself is a little bit like Ripple. It's going down mostly since summer of last year. I mean, Bitcoin as well is going down, but it definitely feels a bit more bleaker. It's not the same sort of momentum. Within the very short term, you have a bit of a head and shoulders with the head, left, right shoulder, or some sort of a range. And here you will look for a break to 50.91. Okay, good. So what did we do today? Well, we talked about halving, how that influences Bitcoin, and how that is not really a driving force today. And we explained that why. Simply is post the coronavirus crisis. People now very excited. I think it's a situation again where people, take some spare money and put it into the markets, and they do that in good times. They don't do that when they can't leave their houses. So I think that's the big challenge, and there is a high correlation between stock markets and crypto. So that's one thing we talked. We talked about as well about usage in dApps, which is terribly low. So the whole idea that it's going to revolutionize the world is not just there. There are many reasons for this. Obviously, governments fight this strongly. because it's going to be more difficult for them to tax us if they don't know where our money is at. But it is what it is, right? So the revolution might come, but you can't see it by looking at the money, where the money is heading right now. And then we talked about Bitcoin, how the big level is about 10,550, how that level needs to go to create a massive move. And we talked about maybe we can get involved at 10,095 if we wanted to, and then add a bit more on the break to the upside. But we also said if we don't take out 10,552, then this is never going to happen. We're not going to break out, and we're probably going to go back to the midpoint here. Okay, good. Let's see if you guys have any questions. And if you do have questions for me, because you're watching the recording here, because we were supposed to do this on GoToWebinar, but there was some mistakes with the organizers that actually put on the wrong time here. So sorry about that. So if you do have actually questions, you can always email me at alejandro.zambrano@atfx.com for any questions about this presentation or anything about the premium course or anything about ATFX itself. As I mentioned before, we have that 4-hour crash course in trading. It comes with any of the ATFX accounts that they offer. That covers the basics and really unwraps a complete trading strategy. So you'll know when to enter, where to put stop loss orders, where to put take profits. And then we also talk about money management techniques, like how much to bet per trade, which is a super important thing. But more importantly, it sort of takes everything I learned over the last 12 years and put that into a nice little package. So you don't have to endure all the mistakes that I did before I became good at trading. It does also cut away a lot of the unnecessary topics. So you might not find me talking about your favorite indicator, and this is a very popular indicator. And why is it like that? Because I cut away. I did spend a lot of time studying indicators. I did a lot of back tests, put a lot of things into system, and I traded with real money. And it took some time until I figured out what really worked. And it works for me, at least. Doesn't mean that it has to work for you, but at least it's a good start. If it works for someone, hopefully it can work for you as well. All right, let's see if you guys have any questions. Let's gonna move over to YouTube. Just give me a question, minute. Okay, so we have Stefan and Antonio. Hope you guys doing good, and Shivam as well. Stefan says hi, Alex, and Antonio here as well. Good afternoon. Why do you think Bitcoin is getting ready for big move when it's been ranging for almost 3 years? So the number one reason for this, I think, was why it's getting ready is because of the this triangle. The fact that we're so close to the upper end of the triangle and this high makes things interesting. And what's also quite interesting, if you get rid of the lines here, you can quite clearly say, just by looking at this, let me see if I can take a print screen of this. It's quite clear to see that whereas before we had more of a bearish bias, we have now far more of a flat situation. And that's the beginning. It's a very well televised, because many times you just trade sideways and then it sort of trades within triangle that breaks out. You don't have time to react. But now you have at least some stabilization here, and that is from, let me see, that is from September of last year. So you have very nice stabilization. It could be that we're going to go down, create a right shoulder, and maybe we'll go down, who knows. But if it does create a right shoulder, then when we take out this level, it's going to be even more powerful. And that is good, because remember, like this as well, everything comes with, after a big party, like a big move. I said this many times, you know this as well, Stefan. After the big move, you have consolidation, right? And that is what's happening now, and this has been consolidating now for quite some time. So I think at one point we need to break out, and we don't usually break out at the end of the triangle. Rather, we break out earlier than that. I mean, a good example on this is, for example, the Euro USD, which is, had like, just to use today's example, this year's example. So you have here that big sharp decline, and then you had a big move, and then you had a big move to the upside. And then after that, you had some consolidation. I know this is different because this was like 1.5 months up, 1 month up, 1 month down. but then afterwards you had that consolidation, and it's about those relationships. And to some extent, I know it's not 100% like this, but if you look at something like the S&P 500, you had consolidation from January following the rally here from 2016. The market went up and up and up and up, right? And went up with 54% from its low to its high in 741 days. And then from January 18th up until October 2019. So for more than a year, we just traded sideways because it needed to consolidate this. And then when we finally had that push, we moved upwards. And hopefully, and in fact, the whole thing just rocked, of course, because of the virus. And hopefully we'll have something similar with Bitcoin soon. Very good. Yeah, that's another example. Like in dollar CAD, as you were mentioning, you know, you had that. So Stefan, as you might remember, we had that very, very nice move, and then you had the consolidation, and now we're going to the sideways of these patterns in Bitcoin, and that's why we're seeing this as well. Okay, I think we're going to wrap things up, guys. Thank you so much for watching, and if you're watching the recording of this, so you're not watching this live, but you are interested in following me as well, if you're not ready for the course, you don't know if that's for you or ATFX, we do offer daily market updates on the ATFX account on YouTube. So you can see here, I do daily market updates where we do cover all the markets. It's not so much about Bitcoin unless you ask for it. It's more about the traditional markets. But if you have questions, I mean, when something interesting happens, I do look at Bitcoin as well. So it does come up when something interesting is happening. Okay, guys, thanks so much for watching, and I'll see you guys hopefully soon. Don't forget to subscribe, very straightforward. Just click on that little bell button that you will see up here. Let me show you. So if you're not logged in, it looks like this. And then there's subscribe, and then a little bell button. Have a beautiful day, guys. Stay safe out there, and I hope to see you guys very soon. Maybe already tomorrow for the next market update with ATFX. Thank you, and bye-bye.